Let's start with the base case right now, which I think basically people are thinking will put up their sort of 5 memoranda of understanding. They think they're going to get an architecture, a general overall sort of sense of where we're going without a lot of specific agreements. Is that where your base case is, and what's the upside and the downside?
That's our base case as well. We think that's what's going to happen, and we're going to get, bottom line, no tariffs on March 1st. Are we going to get the one-and-done resolution on trade talks, and this is no longer a problem? No. We are going to be able to basically move forward from this. And I think, as we were mentioning earlier, cautiously optimistic is really what the market has been thinking. If you think about the low that we saw around Christmas, the market has been lifted by 2 things, improving sentiment around trade policy and the Fed dovish turn. At that point, a 15-18% rally in a span of 6 to 7 weeks speaks for itself at a time when the economic data globally has been weakening substantially. So I think this is more going to be a buy the rumor, sell the fact type of situation, even with a good resolution on this meeting.
Well, so far the chart kind of backs you up. If you come inside the Bloomberg here, the white line shows the U.S. companies that have exposure to China, and then the blue line shows earnings revisions, and they've both been climbing higher. I mean, you've seen a huge rally in the last couple of weeks. David, do you agree? Is this you want to sell this chart or what?
It isn't so much I want to sell it, because I think the fundamentals, even beyond the trade issue, are still reasonably good for U.S. equity investors. The issue is that we were oversold based on trade fears. Those alleviating justify the rally we just had. It is asymmetrical risk reward. I totally agree with Alessio. I think that at this point, if you get the status quo announcement that people expect, that's priced in. But one thing I thought was interesting, what Taylor had up about the economist expectations, no one's expecting the tariffs to come backwards.
True.
Now, and I don't believe they will, but that's something markets have certainly not priced in. What if they actually undo last year's tariff increases? That's something I think could be very bullish.
Okay, so let's be a little more specific. Give me the over and the under. Let's assume, for example, on the over side, that in fact President Trump says, you know what, I'll take back off the 10% while we negotiate this. How much gain would it be?
Well, I think that you could have obviously it's a best guesstimate. Exactly. I'm going to throw in a number. There's only risk there. It could be worth over a span of 1 or 2 quarters, maybe 10-15%, because at that point the modus operandi of the market would be, well, then you start testing new highs. And you eliminate recession risks, and given the Fed has already done a dovish turn.
See, I would add to a bullish argument if the trade deal were to go as well as we could hope it to go. The issue that we need is this CapEx in the United States, that I believe that business investment, which was skyrocketing in the Trump administration, late 2017, first 2 quarters of 18, it completely went away in late 2018. And I don't believe I've been able to find a justification for why other than trade war fears. You get some of that capital expenditure back in the market, and the productivity increases you can see could add a couple innings to this expansion.
So when we wind up looking at the rally we've seen in certain sectors in the market in the last month, that's been led by industrials.
It has.
Do you feel like that was just we were oversold, therefore industrials rallied, or that there's part of this play you're talking about?
See, I'm being more even big picture than that. It's not just the immediate impact to like the industrial companies, for example. It's broad economic growth that I think could come. It would constrain inflation pressures. Unit labor costs would be held in place. You get more productivity, more growth. I think it would impact all sectors in the S&P over the next couple of years.
So let's say that's the over. I won't hold you to the 10 to 15%, but give me the under. Is it symmetrical? Suppose they walk away from this and say, you know, we didn't make progress. We are going to increase the tariffs come March 1, which is only a week from now, for goodness sakes.
No, I would say it's asymmetrical, because at that point, if you unwind the constructive sentiment around trade policy, you have to, first of all, close the gap between the market and the meaningful deterioration that we had globally in the economic data. And you also find yourself in a situation, we've spoken about the US, but if you look at Europe and China, that's where the biggest gaps have been. That's where the stimulus from China, we are waiting day by day to see the stimulus that we saw in the fall to start crippling through the data, and it's not happening. And in Europe, we actually don't know if there is much more stimulus that we can provide. So there, especially on foreign markets, I see more downside, and and part of that will transmit to the US. So again, if you want to touch numbers, looking at where the lows are today, where they've been, that's already by itself a 20% gap lower, right? So I think it is asymmetrical, which is also consistent to where we are from a positioning standpoint and how late we are in the cycle.
So if we wind up getting, David, sort of your scenario that you pointed out, that would be more reflationary if they roll back the tariffs, et cetera, that's not priced in. Is the U.S. going to still be the place you want to be, or is that an EM play? Is that going to be better for Europe? Therefore, you want to buy Europe? Well,
it's not going to be better for Europe, and Europe has other issues altogether. I think we're going to talk about later. I think that EM would benefit immensely, although EM has also benefited from the Fed. You mentioned that other issue. Really, the market sell-off had this trade issue, but the Fed was probably even the larger factor from our standpoint. The EM world now, if the dollar holds in place, it doesn't even have to retreat, but for the dollar to just stop increasing allows some EM sentiment to come back in. So I think U.S. and EM were less sanguine on more developed international, including Europe.